Hello everyone, my name is Anjali Rasali. I am presented on financial statement. What is the financial statement? Financial statement represent a proper and formal record of a financial activity of an organization. There are writing report to evaluate the financial stability, performance and liquidity of a company. Financial statement is the financial effect of business transaction and event on the organization. Basic financial statement. Three types of financial statement are selected by the ac- accounting and financial regulator authorities. First, income statement. How much money our company made last year? It including the following: revenue, expenses, profit overall year of quarterly. Next, balance sheet. The current financial situation of company, a snapshot on specific date of asset. Value of what a company own. Liability. Value of company debts and shareholders. Shareholders equity. It money invested by the company own. Third, cash flow statement. How the cash come and went out of the economy. A company. For example, cash reserve, received and cash spent by the company over the period of time. Income statement. Income statement, also known as the profit and loss statement, report the company financial performance is the term of net profit or loss over the specific period. Income statement in cons- cons- composed of the following two elements: income, what the business has earned over a period, for example, sales, revenue, dividend, income, etc. Expenses, the cost incurred by the business over the period, for example, salary and wages, depreciation, related charge, etc. Net profit or loss come by deducting expenses for income. Advantage. The primary advantage of a income statement in the information is given or revenue. Second, the income statement provide information concerning the return on investment, risk, financial flexibility and operating capabilities. The income statement is one of the most important document for investor looking to buy stock in a particular company. Drawback. The major disadvantages of the income statement in that is considered as the fiction because it is the based on actual accounting and is not given the cash transaction. Cash is the king and free cash cannot be calculated there through income statement. The income statement may be useful for gauging earning per share and outpost financial data, but it does not give much information about future company success. Balance sheet. Balance sheet, also known as the statement of financial position, presented the financial position of the organization at the given data. It including the financial three elements: asset, something a business over a or control, for example, cash, inventory, plant and machinery, etc. Liability, something a business own, for example, creditors, bank, loan, etc. Equity, what are the business own to it own over own it is represented to amount of capital that remain it is the business after it asset are used to pay off it is outstanding liability. Equity therefore represented the difficult between difference between their asset and liability. Advantage. Balance sheet help to communicate information about the financial position of the business at a particular moment in time. It can give a indicators of the financial strength of the business and can also indicate the relative liquidity of the asset. It also gives some information of the liability of the business and when it will fall due. The combination of information as assists the user in evaluating the financial position of the business. It helps in the comparison of asset and liability of a business on 2 days to ascertain the progress being made by business. Drawback: one of the potential disadvantage of the balance sheet is that is only the financial snapshot of the condition of economy. The mean that is only take into a consideration what is going on down moment with the business. Another potential advantage of using a balance sheet is that it is not del you declare their created value of a company. One of the potential problem of using a balance sheet is that this only evaluating a company financial factors. It does not evaluate other factors that can add value of the business value. Cash flow statement. Cash flow statement present to movement in cash and bank balance over a period. The movement in cash flow it is the classified into a following segment. Operating activities represented the cash flow from the primary activities of a business. Inventory activities represented cash flow for the purchase and asset other the inventory. Financial activity represented cash flow generated or spent or raising the repaying shares can and debts together without the payment of interest and dividend. Advantage advantage of cash flow. It providing the acquired information or regard to the following inflation and outflation of the cash resource to and for the enterprises. It evaluates the level of efficiency of the management of the enterprises at regard of the user of the cash resources. It helps to management to lot for future cash planning of the enterprises. Drawback: one of the potential disadvantage of the statement of cash flow in that it does not take into a consideration and future growth. Another potential problem with the statement of cash flow it is that the interpretation that be difficult. In a solution, this is the no use and required other financial statement like balance sheet, profit and loss, etc. and therefore limitation it use. Thank you.